Well, the stock market had a rocky start to 2024, snapping a 9-week winning streak as the Dow and the S&P 500 logged their worst start since 2016. Our very own Jared Blikre was tracking those moves. So, Jared, how bad was it?
Rochelle, let's just back up a second because you said something really important. We are coming off a 9-week winning streak that just snapped last week. So it's normal to expect some consolidation here after a blistering rally. And we're seeing the S&P 500 up today. But more importantly, Rochelle, to answer your question, the year to date so far is negative. This is the first 5 days of January, the first 5 trading days. And you can see the S&P 500 is down 1%. This is important because January is a bellwether month. And what happens in January can actually predict with pretty good accuracy what happens the rest of the year. So let me just show you how this breaks down. And all of this comes via Stock Trader's Almanac. These are seasonality studies done by Jeff Hirsch and his late father Yale Hirsch going all the way back to the 1970s. And it was in the early 1970s that the Santa Claus rally was first discovered. It is a 7-day period, the 5 days, the last 5 trading days from the year, plus the first 2 trading days of the year that equal the Santa Claus rally. That's one of these 3 January indicators. Secondly, I was just talking about the first 5 days. This is January 2nd to January 8th this year, so ending today. Finally, we have the January barometer, and that's simply the trading returns for the entire month of January. If all 3 of these are negative, it actually predicts with 80% certainty that the year will end in the red. So that's something we want to pay attention to. Now, if it comes in mixed, and there's a lot of ways you can slice and dice this, we can actually make some other predictions about that, but I will be bringing these on a day-to-day basis. Suffice to say, we are in the red for the year, and that portends potentially red for the rest of the year. I just want to show what has happened in the sector action because that's also very telling this year. Utilities is in the leader. That's up 1.8%. That is defensive. Healthcare, number 2, that is defensive. Financials, not defensive. That's actually good to see. It's more value and cyclical, but staples also in the green. So bottom line, we're already starting out the year very defensively, which is a market reversal from last year.